Bitcoin recovers. After initial drop following Trump's tariff announcement. Bitcoin initially dropped after U.S. President Donald Trump announced a 25% tariff on all steel and aluminum imports, but later rebounded. Trump stated that he would announce retaliatory tariffs against countries imposing taxes on U.S. exports on Tuesday or Wednesday. Markets gain strength against Trump. Kathleen Brooks from XTB noted that Bitcoin's reaction to these developments suggests that markets have become more resilient to Trump's tariff threats, or have at least adapted to trading based on such statements. Bitcoin is currently trading at $97,776, up 1.8%. The crypto market's attention is now focused on Federal Reserve Chairman Jerome Powell's semi-annual testimony before the House Financial Services Committee tomorrow. Additionally, January's CPI data will be released on Wednesday. Last week, Bitcoin spot ETFs saw a net inflow of $204 million, while Ethereum spot ETFs received $420 million in capital. Trump takes major step to support cryptocurrency market at White House signing ceremony. At a signing ceremony held at the White House, Trump took a significant step towards supporting the cryptocurrency market. As part of this initiative, Trump signed an executive order calling for the establishment of a working group focused on cryptocurrencies. According to the executive order, the group, named the Digital Asset Markets Working Group, will be responsible for developing a federal regulatory framework for digital assets and evaluating the creation of a strategic national digital asset reserve. Additionally, the order directs agencies to provide recommendations to the working group regarding regulations affecting digital asset markets that should be repealed or modified. Furthermore, the executive order prohibits agencies from developing or issuing a central bank digital currency, CBDC. During his election campaign, Trump had promised to make the U.S. the planet's crypto capital and the world's Bitcoin superpower. Trump's push for full-time office return for federal employees sparks controversy. Trump's decision to require federal government employees to return to offices full-time has sparked debate. On Monday, Trump signed an executive order instructing federal agency heads to end remote work arrangements and mandate that all federal employees return to in-office work 5 days a week. This move has been interpreted as potentially leading to job losses for some employees. Following Trump's order, the U.S. Office of Personnel Management issued a letter to agencies on Wednesday recommending that they set a target for all employees to return to full-time office work within 30 days. While some federal government employees, their families, and industry experts have criticized the order, some analysts argue that fully implementing Trump's directive would be highly challenging and could increase federal costs. Labor expert Mika Cross told CNN that the new mandate could have a devastating impact on certain groups, such as spouses of military and foreign service personnel, who are required to live where their spouses are assigned. Cross also pointed out that federal employees working remotely from other states may need to relocate to Washington, D.C. under the new policy. This would necessitate salary adjustments in accordance with the city's cost of living. Trump's executive order states, "The heads of all departments and agencies within the executive branch shall take all necessary steps to end remote work and ensure that employees return to full-time in-office work as soon as possible. Department and agency heads may grant exemptions where deemed necessary." Meanwhile, workplace research firm Gallup reported last year that 6 out of 10 remote workers would be highly likely to seek employment elsewhere if they lost their flexibility to work remotely.